Hey, welcome back to my channel, Ramansani Mortgages. Today, we will continue our discussion on reverse mortgages, but dive a little bit deeper. When considering a reverse mortgage, it is essential to understand the costs and risks involved. So, in this video, we'll break down everything you need to know so you can make the best financial decision for your future. Let's start with the costs. Like any financial product, reverse mortgages come with fees or closing costs, as they are more typically known as in the mortgage vernacular. Upfront costs, such as appraisal fees, come out of the pocket of the client. Now, once the file is submitted to the bank, we set out and book an appraisal to assess the current market value of your property. This gives us a better idea of how much you qualify for when it comes to getting a reverse mortgage. And then the second set of fees are the origination fees and legal expenses. So these are also involved in the upfront costs. These can range from a few $100s to several thousands of dollars, depending on the full loan amount you have qualified for. These expenses usually come out of the proceeds of the mortgage, and the client isn't out of pocket of any of these funds. So, unless they choose to pay them out of pocket, which I have seen clients do. Secondly, there are ongoing costs that occur over time, and that is the interest your reverse mortgage accumulates. As you remember in my last video, I mentioned that with a reverse mortgage, you do not have a monthly mortgage payment like a traditional mortgage involves. However, there are interest charges that accumulate over the term of the mortgage, but you do not need to pay it out until you decide to sell or move from your home. But they are added to the current mortgage balance over the term of the mortgage you have decided upon. So it could be 3 years, 5 years, etc. You can choose to pay them if you'd like. So that there's nothing that's stopping you from doing that as well and incurring these costs. There are some key things to also consider, and that is the risks. One is, how is this going to impact your family? If you're leaving your home to your children and that is a priority, it's important to know that the loan must be repaid before they can claim ownership. So they must have to get qualified for a mortgage. And that means having their ducks in a row is top priority. So I would also insist that they speak to a mortgage professional to make sure that in case anything happens, they're ready to go and move forward with taking ownership of your home if that is something that they will be doing in the future. Another risk is to meet the mortgage terms, such as keeping up with property taxes and insurance. That must be maintained to avoid foreclosure of your property. And the best way to do so is to pay your property taxes on a monthly basis. There's also the question of, how do you manage these risks? And that's a question I hear all the time. Working with a trusted mortgage professional to ensure that a reverse mortgage aligns with your goals of financial stability and freedom. Plan for ongoing costs to avoid surprises. And that goes in hand with making your property tax payments on a monthly basis versus paying them quarterly as you would be doing right now. And most importantly, involve your family in the decision to ensure everyone is on the same page when it comes to this product. Understanding the costs and risks of a reverse mortgage is crucial, but don't let that deter you from making that decision. With the right approach, it can be a powerful tool for you and your financial stability. Stick around as we tackle some of the common myths and set the record straight about reverse mortgages. They are often misunderstood, as is with any other product that you don't know about. But these myths can actually stop people from considering a solution that could benefit them greatly. So let's set the record straight by debunking the most common misconceptions. You want to stick around until I share all the myths with you. But let's start with myth number one, that you will lose ownership of your home. One of the biggest myths that I hear is that you lose ownership of your home with a reverse mortgage. The truth is, you don't. You remain the homeowner even if one of you or your partner passes away. The lender, which is the bank, registers the mortgage on your property to secure the loan, but the title stays in your name. unless you sell or pass off the property in an inheritance, then you have no rights over the home. But until you do that, it is your home and you maintain ownership. Myth number 2: reverse mortgages are for people in financial trouble. Some people think that, but that's not the reason that people go into reverse mortgages. It's not only for people that are in dire financial straits. In reality, they're used by homeowners who want to optimize their retirement income, delay drawing down on investments, or fund life goals like travel or home renovations. Because remember, this is tax-free equity that you are accessing. So any excess that is given to you, you can use to do with whatever wish you have. So that could include traveling as well. Myth number 3: you can owe more than your home is worth. And that is a big one. People think they'll owe more than their home's value if the balance grows with added interest over the term of their loan. Thankfully, reverse mortgages are non-recourse loans, meaning you or your inherited children, heirs will never owe more than the home's market value, even if the loan balance exceeds it. Your home will also never go into negative equity with a reverse mortgage. So keep that in mind. Myth number 4: you can't leave the home to your heirs. Finally, that is one big one that I want to talk about, which is the inheritance. Some people believe that you can't leave your home to your children if you have a reverse mortgage, and that is simply not true. Your children can repay the loan to keep the home or sell it and keep any remaining equity after the loan is passed off to you and paid off. And then they register that property in their own name or sell it as, but they are free to do with the property what they would like. Until then, you have ownership of that property. Now that's it for today's myth busting session. Now that you have the facts, you're one step closer to making an informed decision about reverse mortgages. Don't forget to like, share, and subscribe. And feel free to leave your questions in the comments. Let's continue the conversation and help more people unlock the potential of their home's equity. I'll see you in the next one, guys.